This is Brian Watkins, and this is the video explaining the QuickBooks practice number 3 for Accounting 231. Today we're going to run a specialty fishing supply website, and the purpose of this practice is to introduce you to how you use QuickBooks to account for sales discounts. When you buy something on credit from a company, you buy it according to terms that define when you have to pay the bill. And companies want you to pay the bill quickly, so they offer sales discounts to you for paying them cash within a certain amount of time. So we're going to do that. We're also going to learn how to do an inventory assembly. We're going to take lots of parts and put them together. So let's look at what we need. We need the retail shop, sole proprietorship, easy. So let's start here. We're going to Accounting 231, QuickBooks, practice number 3. Our industry is going to be a retail shop or online commerce. Save yourself some time. Someday when you're setting QuickBooks up, there's a lot of pre-programmed industries here. For example, photographer is probably not going to have lawnmower expenses or gasoline expenses. Maybe they drive around. But you get the idea. There's not going to be too many veterinarian bills for a church, but there would be for a ranch. So remember that it works for more than just retail shop. We use that because it's a very broad category. We're going to use a sole proprietorship, which means just you, and we don't need any more information. If this were your business, yeah, you'd enter everything, but this is just an academic exercise. One of the problems students have is they want to get this done fast, and the computer doesn't like QuickBooks because QuickBooks makes such a huge demand on resources. So it says not responding, but it's really thinking about it. It's really going to be okay. Don't hit any keys. Just be patient. The computer will get there, and once it does, just start working. So we're going to minimize, get rid of the quick start, minimize this. Now we need inventory. So we'll go to Edit, Preferences, Items in Inventory, Company. There's the box. Check the box, hit OK, and hit the home button to see what you just did. I just put in purchase orders and inventory there. Okay, we need sales tax. So Edit, Preferences, Sales Tax. Now we're going to charge sales tax. You may charge sales tax in many states, in which case you need an item for every state. But we're going to pretend we're just here, sales tax. 10% is the rate. State Tax Authority. We'll quick add them and hit OK. So there's our most common sales tax item. Now this is already checked just right. All you have to remember is when this little thing comes up, you say OK. Alright, now blank screen. If it's blank, don't panic, go home. So here we are, we're ready to go. Everything's set. So our first transaction is to create a bank account and put $25,000 into it as your owner's equity. And it's on the 1st of February. Alright, the banking is done here in this corner of the screen. As soon as you hit record deposits, it will tell you you need to create a bank account. Just call it Bank of Laie. Don't change anything else. Okay, we want one bank account. Alright, now change the date. Nothing will get you into trouble more than those dates. So we've got the Bank of Laie, we've got the date. Click on the first line, and you're going to put yourself in. You're an other. Vendors are businesses that do business with you. Customers are people that buy your products. Employees get salary, and you pay taxes for them. Other is you. So you've got your name and information in there. You're going to put in your owner's equity. It's your initial funding. You're going to use cash, and you're going to put in $25,000. Check the date again. You just always check the date. Nothing gets you into trouble more than failing to check the date. So save and close. Yes, we want to use the retained earnings account. And you heard the beep. Be kind to everybody in the testing center. Edit, Preferences, General. Turn off the beeps. Otherwise, the testing center sounds like an arcade, and they get upset with me. All right, back to our transaction. We put in $25,000. I can say previous and check my thing. Everything's good. Or I can go to reports and company and financial, balance sheet, and my balance sheet shows 0. So there's a problem there. January 9th, 2015. Oh, I know what happened. We set the date for February 2015. Can't have that. I'm going to go back and put the date as February 2014. Okay, now I'm going to leave this in the video for 2 reasons. One is I want you to remember the date. You can never go wrong checking that date over and over again. The second thing I want you to remember is that anything we do on QuickBooks can be fixed up to a certain point. Okay, the point it can't be fixed is when we do reconciliations. You haven't done that yet. So what we did here is we went to our bank, hit previous, saw that we had done it wrong, corrected it. Everything's fine. Now if we go reports, company financial, balance sheet, I see there it is, 25,000, 25,000 owner's equity. So checking up on yourself is not a bad idea. It will be especially helpful as a habit when you get to the final. All right, we've got 4 purchase orders, 1, 2, 3, and 4. They're all on February 2nd, and they're all for the fishing parts that we're going to put together. So I know it can be tedious, but jump in and let's get these purchase orders done. The first purchase order is February 2nd, 2014. Make sure you get that right. And it's to Daiwa Corp. And we'll quick add them automatically as a vendor. Go to the first item. We have no item, so we're going to add a new item. Inventory part. We'll call it a fishing reel. And the cost of these reels is $300 each. And we're not going to sell them separately, so we're not going to worry about putting a sales price. We always must have an income account. Always. Merchandise sales. Now that we have it, we have to put the quantity. 10. This is the 3rd time I think I've recorded this video because I keep forgetting to put the quantity there. And I know students forget as well. It's very frustrating. Because then when you come to pick up your order, you don't have any order because you forgot to put quantity. So check your quantities here. That one's good. Okay, now purchase order number 2. Same day, tackle direct for rods, $50 each. So same day, tackle direct. Am I correct there? Tackle direct. I'll quick add them. And let's put this fishing rod in. And I hope you appreciate that we could put a lot more information in here. Part numbers, addresses. We're just leaving those blank for academic purposes. But someday you'll want to make sure you put the information in once so that it's there when you need it. And I'm going to say 10. And this is the fishing rods. Fishing rods. Okay, we can use save and new. Fine. And our 3rd one is going to be moi moi for fishing line. Same date. Quick add them. And this is going to be fishing line. Oops, don't need that. Okay, this side is what you see on the purchase order that goes to your customer or to the business that you're buying from. This line is what you see on the receipt that your customer gets. So sometimes you want to keep those separate so they don't know, for example, that the fishing line that you're charging them $50 for really cost you 10. Alright, merchandise sales. There we go. We're not using a sales price because we're going to put it all together. Okay, make sure we order 10 of them. Fishing line. Now the 4th one. The 4th one is Diamond Fishing Supply for 10 tackle boxes, and it's going to have everything in each tackle box. So we'll do the same, add the vendor. And I just want you to remember, put in the back of your head, that here on inventory parts, I'm not just buying one item. I could have a whole list here. Tackle box, weights, hooks, bait, all kinds of stuff. And that would simplify my ordering process because it's already typed in. So we're just going to pretend we've typed in all this stuff. It's $100, merchandise sales account. Okay. 10 bucks. Tackle box. So one line on your purchase order could mean some unlimited number of items that get ordered. Save and close. Alright, now we've done 4 purchase orders. Let's check them. We'll go to purchase orders, hit previous. 10, I'm looking here at the quantity. 10, 10, 10, 10. Okay, let's look at the dates now. 2, 2, 2, 2. Everything looks good. So now let's proceed. We're going to write check number 1 to Gary's Web Design for $1,500, representing payment for web design and hosting and service of a website. Okay, it's on the 5th. So we go to our checkbook, change it to the 5th. Now we're going to uncheck this box so that you see a number here. Gary's Web Design. Okay, he's going to be a vendor. Remember, it's not automatic on a check because checks could go to anybody. So Gary's Web is a vendor, and this is for website design and hosting. And the account is fortunately already there for you, computer and internet expenses. So I'm going to say $1,500, and it's going to be for website design and hosting. Okay, that's how you write a check. Save and close it. If you made a mistake, you hit your checkbook, hit previous, and make your changes. Alright, so we've done the check. Now we're going to start getting the goods in. So on the 12th, we're going to get Daiwa Corporation's order with a bill that contains additional shipping charges. That's not a problem. I taught you how to do that before. What I haven't showed you is how to do terms. So here are the terms. 2.5/10 means that if you pay the bill within 10 days, you can pay 2.5% less. That's cash discount. Net 30 means you owe everything within 30 days. That's your agreement. So let's, we can copy that. And we'll go into our receive inventory with a bill. So with a bill just means you're automatically sent to enter bills. We know we're buying from Daiwa. We have a purchase order. We'll click that so the purchase order comes in. We know it's the 12th of February. Daiwa's on the 12th. And here's the terms. When you hit the terms, these are the terms that they're already programmed in the machine. So we're going to have to add new terms that are 2.5/10 net 30. Typing them in the box is only a label. To make it actually work in the system, you have to change these 3 boxes. Net's due in 30 days. Discount percentage is 2.5. Discount if paid within 10 days. Okay, now as soon as we do that, it's in the pick list. So we don't have to do that again. Has all the dates right, but remember we paid an extra $400 for shipping. Here is where we make that change. $3,400. So there's our bill, $3,400. Let's check our date. 12th, $3,400, Daiwa. 12th, $3,400, Daiwa. We're good. And we can have that appear next time. All right. We're now going to get a box from Moi Moi with 10 rolls of fishing line and a bill for $120. The extra is shipping costs. So let's go. Receive inventory with a bill on the 13th from Moi Moi. Select the purchase order. There's no terms given, so we can either leave that blank or just say due on receipt. And this is the fishing line. But we know the total bill was $120. Okay, so we're just going to change that 100 to a 120. And that adds in the shipping costs. Okay, and remember, it's not a shipping expense because it's part of inventory. The cost has to be added into the inventory item, which will then become cost of goods sold later on. All right, so that's the moi moi. The next one is on the 15th. We get Tackle Direct's package, but it comes with only 9 rods, and it comes with a bill that we're going to pay right away. So let's go receive inventory with a bill. It's the 15th. It's Tackle Direct. We're going to get the date or the purchase order in. Okay, but they only gave us 9 rods, so I haven't showed you how to do this. Just change the quantity to 9. Recalculate. 450. Okay, 450. Yep, bill of 450, and we're going to pay it with check 2. So there's our bill. We don't have to put terms in. So this is the fishing rod bill. And this one we're going to go straight across and pay it. So we're going to find Tackle Direct. There it is. There's no discount suggested. It's still the 15th. We're going to assign our own check number 2. So I'm going to pay it with check number 2. Hit OK. And then I'm done. And I could check it by looking at the book, previous. And there it is, check number 2. It entered everything for me. Alright, so now we've done everything that we were to do with February 15th. I'm getting you ready for the final here. And one of the things that people mess up on the final is that they look at the transaction and they assume it's one thing. Sometimes transactions have several items that you need to do. Here the extra was that you had to pay the bill. So be watching for that. Alright, on the 16th we get the Diamond Fishing Supply. We get another odd set of terms. So copy that. So Diamond Fishing Supply on the 16th. So 16th, Diamond. Yes, we want the purchase order in. And we have odd terms, which are 320 net 45. So net due in 45 days. Discount of 3. Discount if paid within 20. Okay, so there's our 320 net 45. And this is the tackle box. I don't think there was anything odd on this one. Oh, there's $50 for shipping. So we're going to put $50 for shipping. There we go. Now with this bill, you should have received all of your inventory. Check that. Go to Reports, Inventory, Valuation Summary. We should have 10, 10, 9, and 10. Good. So we got all of our inventory in. Check these values to make sure they're the final values, not the values you ordered, but the values that you actually paid, because there was additional charges. Now we've only got 9 rods. That's a problem. We want 10 of everything. So we're going to drive into town and we're going to buy 1 rod and we're going to pay retail at Roy's Fishing Supply, $110. So we're going to go to check number 3, and it's the 16th still, and we're going to go to Roy's Fishing Supply, and we're going to spend $110. Now, how do we get this into our inventory? Here is where you're going to use the inventory adjustment procedure. So we go to the Choose New Account, and we'll just make it an other expense. This should be your only other expense. The reason we do that is because an inventory adjustment is not really an accounting account. This is only a QuickBooks trick. And it's designed to keep you from preventing all of the information that usually pertains to fishing rods. You don't want to program your computer to think that $110 is the standard fishing rod price. You know it's not. It's supposed to be $50. Okay, so now we have inventory adjustment. This was the replacement fishing rod. Now, put a menu here to replace missing rod. As soon as I hit save and close, on any inventory adjustment, I immediately go to inventory activities, adjust quantity value. I'm going to adjust the quantity and value of my fishing rod inventory. And I'm going to take the adjustment money out of the inventory adjustment account. My goal is to get all of that $110 out of inventory adjustment and onto fishing rods. So I now have 10 fishing rods, and instead of, down here it says 450, instead of 450, I have 450 plus the 110 that I spent. So I have 560 is my new value. 560. This screen allows you to force inventory numbers the way that GAAP requires inventory to be done. I'm hoping that QuickBooks someday will make it a little bit easier, but if you know how to do an inventory adjustment, you'll be fine. So this is to add cost of replacement rod. You bought it at retail. So now my average cost per item is $56. It's not $110. If I had used the item method on the checks, then that would have messed up all of my inventory bookkeeping. So now my inventory is complete, and I have 10 on hand for everything. Good, because the next thing I'm going to do is I'm going to have Aaron Kalama put all of the materials together into one custom fishing package. You will call your assembly a custom fishing package. All right, February 16th. And we're going to write a check for $250. So here's a check. Aaron Kalama. He's a vendor. Okay, and this is going to be an inventory adjustment again, because the $250 will be spread over the entire inventory. It's not going to one item, it's going to these new fishing packages. Assembly of fishing packages that you're going to give to each tourist right when they get off the plane. Now, the rule is that once I do an inventory adjustment, I immediately go to inventory activities, but here I first have to build the assembly. Then I will assign the cost to it. So the assembly item, I'm going to add new. This is a new screen for you. Instead of a part, we're doing an assembly. And the item is going to be called a custom fishing package. The cost to us, we're not going to worry about this number, it's going to come later. This is going to be a custom fishing package. Now, we know the sales price of the package is going to be $999. So we'll put sales price, $999. We know we always have an income account. So here's where the assembly takes place. This is the bill of materials. So we know we're going to have one fishing line. We know we're going to have one fishing reel. We're going to have one fishing rod. Oops, not there, right here. And we're going to have one tackle box. Okay? It automatically knows that all those materials cost $460, and it's going to pull them together when I build them. Maximum number you can build, 10. That's what I want to build. So assembly of fishing packages. Packages. There we go. Now that they're assembled, you're going to see in your inventory, if you go take a look, that now, wait, it's not doing it yet. Maybe I have to build and close. Close. There we go. Now my inventory is going to look completely different. It's going to have 0 of all the components, but it has 10 of the custom fishing packages. But we know that they didn't cost $5,130. Instead, we go back to inventory activity. Cancel that. Inventory activities. We're going to do our inventory adjustment, and it's going to be a value adjustment. And the item is going to be the custom fishing package. We put $250 into these, so we get 5380. Okay, that's $5,130 plus the $250 to add costs of assembly. So now our average cost per item is correct. It's $538. Businesses that fail to capture the costs in their inventory go belly up. They go broke because they sell their inventory too cheaply. So now we've got everything priced correctly. Everything is assembled. So let's make a sale. You receive a deposit of $999 that's automatically deposited in your bank account via your website. You must now ship a kit to John White of Seattle, Washington. The post office refuses to ship the fishing pole. Shipping charges are $125 and paid via check number 5 to FedEx. Mr. White does not pay sales tax as he is from out of state. Now, I'm highlighting here that business doesn't follow rules. Things happen that you don't expect. You thought you were selling custom fishing packages to people who were coming to Hawaii, but somebody saw that online and they want it. And now you're stuck with the shipping charges because you didn't put anything in your website to cover those. So let's first take this apart. You've received $999. It's in your bank account. So now you have to account for that by doing a sale to John White. We do cash sales with receipts. Bill your customer and receive payment. We do credit sales with invoices. Since we already have the gentleman's money, we're going to create a receipt. And his name is John White. This time, he's a customer. I think it's now the 20th of February. Make sure you get those dates right. And John White purchased one custom fishing package. However, he's out of state. Now he's paid you cash because it's already in your bank account, but the tax here, let's get the tax out. This is not a taxable transaction. So when I click on tax, this little arrow appears that you didn't see before. And I'm going to say it's a non-taxable sale. That will keep him from collecting sales tax. Watch for that. The only time on the final or on anything in my class that you'll ever do non-taxable, I will tell you that it's non-taxable. Don't assume that because someone's from out of state that it's non-taxable. I will tell you when to charge tax and when not to. So this is to sell package to John, well, sell package to Washington resident. Okay. So we're glad we sold it. We're happy to have the money. And what do we do when we make a sale and create money? We have to put it in the bank. Now we know it's already in the bank, but QuickBooks doesn't know it's in the bank. If I go to reports right now and look at my balance sheet, I'm going to see undeposited funds. And that's an instant go back to the testing center. You cannot have undeposited funds, or for that matter, an inventory adjustment on your income statement. The way to fix it is to click on the bank, click on the payment. It's that easy. It's done. Now it's deposited. Now if I go to balance sheet, it's all in my checking account. This is the cash account. The first line of any balance sheet is the cash line. So if I say how much is in your cash account, it's a Bank of Laie account. All right, looks good. So let's go back. We now have to ship to FedEx, so don't forget. So FedEx, and we're going to put that as a vendor, ship to Seattle, and let's see if there's a shipping expense. There's not a shipping expense, so we're going to make a shipping expense account. So we're going to make an expense account and we're going to call it shipping, and it's going to be $125 and it's going to be to ship to Seattle. This isn't an inventory adjustment because it's a post-sale cost. Save and close. Now we've done everything, and this is where I tell you have to be careful to do everything that's in the transaction. So now we're going to go on the 20th, we're going to write check 6 for $300 to immediately change our website so that we don't make that mistake again and have to send somebody at our cost to fix website to charge for shipping. So this is a computer expense of $300 to fix the website. Done. Okay. You're contacted by Hans Mueller, a tour guide who wants 5 fishing packages to outfit a group of wealthy tourists. You agree with him to give him the sets on credit with the following terms. $215 net 30. Prepare an invoice and don't forget sales tax. So it's an invoice because he hasn't paid us yet. And we'll put Hans Mueller. He's our customer. It's now the 22nd. Is there a date? We have terms now because they haven't paid us. And it's going to be a new set of terms. And the terms that we're using are 215 net 30. 2/15 net 30. So he owes us in 30 days, but we'll give him a 2% discount if he pays us within 15 days. And of course, 5 of our custom fishing packages. That's a big purchase. So we say, pleasure working with you. Okay. This is the Mueller purchase. Date, amounts, everything looks good. We'll save and close. Now that we have that closed, we go back and let's just double check, make sure that we did that invoice correct. I just check 215 net 30. Everything's good. Alright, next thing we're going to do. He's going to make the payment on the invoice. And he has the right to make the payment at a discount within 15 days. This is on the final, so please pay attention to this procedure. This is one of the things that seems to trip students up. So let's copy the check amount, so you might write it down or otherwise get it. And he says he's likely going to have need of about 20 kits in the upcoming 2 months. Beware of people that make big promises, okay? Unless they sign a contract or actually make an order, don't do anything with it. So we're going to deposit that check as soon as we get it. And we go from create invoices over here to receive payments. And we've received from Mueller. And the date is now March 1st. And the amount we received is $5,384.61. It's a check. Alright, now, this customer has discounts available. To apply discounts, click discounts and credits. Great. Okay, now what? Well, the amount of the discount is $109.89. Because this is your customer that's taking a discount, your discount account is a sales discount. Okay, second one on the list, right after you push that button. It's a sales discount. I say done, and now everything balances. Okay, the amount that they gave us in the check is exactly the amount due less the discounts and credits. So save and close, but do not forget to immediately go back and deposit those funds in the bank. Okay, so now let's look here at our income statement. We haven't looked at that one yet. Always use the standards. Always check that to all. And there's sales discounts right at the top. That's where it's supposed to be. If you've learned how to do that correctly, you'll do fine on the final. Again, remember, sales discounts there. Okay, let's take a look at the last thing. Now pay all outstanding bills, including transferring the sales tax to the state tax authority. Easy stuff. So we go back. We're now going to pay bills. It's March 1st. I don't know why they stick the date down in the lower left corner like that. But we're going to check each box. Let's see, discount date here. Ooh, we've got a discount coming up for Diamond. So let's pay the first 2 separately because we're going to assign check numbers to those and we don't have a discount to worry about. So we'll pay What were the check numbers that were on? I think our last check was check 6, so 7 and 8. 7 and 8. Okay. Let's pay more bills. Now we're going to do this one separately because now we have what's called a purchase discount. Sales discounts come when your customers take advantage of a discount. But here, what we thought was going to be $1,000.50 worth of inventory turns out to be $31.50 less. So what we're going to do now, let's take out here suggested discount. The discount is going to go into the inventory adjustment. It's the only place you can put it. Alright, so inventory adjustment of this one. Why? Because this is money that we're saving. This isn't money that our customer is saving. So we hit done, pay selected bills. I think this is number 9 now. Paid. Okay, one more thing that we have to do, and that will be visible if you go to the banking, reports, balance sheet. Okay. Please remember that, let's see, we were looking at the balance sheet. Please remember on your balance sheet to look for sales tax payable. If you don't see it, that means you paid it off correctly. But if it's there, you've got a problem. So let's go now to manage sales tax, pay sales tax, and you've got to change both of these accounts back to the relevant date, which here is March 1st. Show sales tax due through March 1st. Okay, check number 10, click the box, everything looks good, hit OK, and then close. Now let's look at the checkbook. There's our state tax authority check. So it's been paid. Let's check our balance sheet. There's the balance sheet. There's no undeposited funds, and there's no liabilities for unpaid sales taxes. Remember that for the final, and you'll save a lot of trouble. Just look at your balance sheet. If you saw undeposited funds, you would immediately go back and click on deposits, and they would come up. If you saw the sales tax payable, no problem. Just go back and make sure you pay it. Likewise, if you go to your reports and you get your profit loss up, let's make sure this says all, and you see an inventory adjustment, then you would go back and fix that. Learn how to fix your errors and you'll avoid a lot of extra work. So now you're done. You're going to upload your profit and loss. Okay, you're going to upload your balance sheet, which we just did, but you're also going to upload the accounting general journal. And just a word about this, because a lot of people aren't doing it. I want you to make sure and print this one to a PDF writer that's in landscape mode, because otherwise it comes to me and the transaction is chopped off and I have to cut and paste them so that I can help you out when things go wrong. So just remember, you need the journal, the balance sheet, the income statement, and let me just put up the numbers again so you can double check. Here's your balance sheet, so pause this and take a look, make sure everything's right. Here's the income statement, pause it, make sure everything's right. When it is, you're done. Get yourself out of the testing center and aloha.